The Restaurant Resale Report, June 2026, what buyers wanted, what sold, and what's next. Executive Summary. June 2026 was We Sell Restaurant's second strongest sales month of the year, behind January. It also offers an early look at where the restaurant resale market may be heading. By comparing closings with buyer inquiries, signed confidentiality agreements, and Google search activity, we can identify what sold and what buyers may purchase next. 3 themes emerged. The Southern Boom Belt continues to dominate restaurant buying activity. Florida remains the strongest market for converting buyer interest into sales. Franchise resales accounted for nearly half of June closings. Because transactions often take months to close, inquiries and signed confidentiality agreements indicate future activity. The Boom Belt continues to lead. The Boom Belt includes Alabama, Arkansas, Florida, Georgia, Louisiana, Mississippi, North Carolina, Oklahoma, South Carolina, Tennessee, and Texas. Together, these states generate approximately $9 trillion in GDP and have accounted for most recent U.S. population growth. In June, the Boom Belt generated 76% of top buyer inquiries, 88% of signed confidentiality agreements, 88% of Google traffic, 74% of restaurant sales. This is the second consecutive reporting period in which the region dominated buyer activity and completed sales. Population growth, business migration, and economic expansion are creating more buyers and restaurant transactions. June franchise sales. Surged franchise resales represented 48% of June sales, more than double their 21.6% share of 2025 annual sales, despite generating only 24% to 36% of top inquiry activity. Franchise transfers often take longer because buyers may need franchisor approval, financing, training, and onboarding before closing. Economic uncertainty can favor established brands with proven systems, customers, and franchisor support. Resales can also cost substantially less than new unit development, attracting first-time operators and multi-unit investors. 1 month does not establish a trend, but June suggests a strong franchise resale pipeline through 2026. Where buyers are shopping today, signed confidentiality agreements are among the strongest buying indicators. These buyers have moved beyond browsing and are requesting financial information. North Carolina generated 44% of top signed confidentiality agreements in June. Tennessee followed at 16%, driven largely by Nashville listings, while Florida produced 12%. Across the top 25 results, the South accounted for 76% of new buyer inquiries, 88% of signed confidentiality agreements, and 88% of Google traffic. It also produced 74% of June's 42 closings. The alignment between inquiries and sales reinforces the South's position as the nation's restaurant resale engine, although conversion varied by market. Closings for the month. Florida accounted for 31% of June closings, followed by North Carolina at 21%, Georgia at 14%, Colorado at 7%, and Texas at 5%. Colorado led non-Southern markets, showing that quality listings can attract buyers anywhere. Messages that resonate with buyers. Raleigh's motivated seller, Turnkey Raleigh Restaurant, led June engagement. It ranked first in new buyer inquiries, first in signed confidentiality agreements, and third in Google views. Listed at $99,000, it reflects the type of opportunity that moves buyers to act. 3 additional listings ranked in the top 25 across all 3 categories. Downtown Nashville Cafe and Coffee Shop, fully equipped, Nashville, Tennessee, $99,000. Donelson, Tennessee Cafe and Bakery, low rent, Nashville, Tennessee, $39,000. Turnkey Alpharetta second-gen sandwich shop with equipment, Alpharetta, Georgia. 18 listings appeared in at least 2 categories. The pattern is clear. Buyers respond to prices below $100,000. Turnkey operations, limited build-out, low occupancy costs, and headlines communicating urgency or exceptional value. Franchise versus independent restaurants represented 78.4% of 2025 sales. In June 2026, independent closings were 52% and franchise closings were 48%. Independent listings still held 64% to 76% of top inquiry positions. However, June franchise closings included multiple Subway transactions, including 3 individual deals and a 3-store package, plus Charlie's Cheesesteaks, Crumble, Tropical Smoothie Cafe, Auntie Anne's and Jamba Juice co-brands, Famous Toastery, Cinnabon, Captain D's, and Big B Coffee. Nearly 74% of June closings were below $250,000, matching the 2025 pattern. The affordable segment remains where most deals occur. Notable June transactions. The month's largest sale was in Boulder, Colorado, confirming continued demand for 7-figure transactions. The fastest closing was a Largo, Florida concept that moved from listing to closing in 17 days with 14 signed confidentiality agreements. A Raleigh wine and beer location generated 155 signed agreements before closing, showing that inquiry volume alone does not guarantee a faster sale. 3 multi-unit packages closed in June: Charlie's Cheesesteaks, a 3-store Subway package, and a 6-store Captain D's package. Multi-unit listings in Ohio and Texas also ranked among the top Google traffic generators, indicating continued interest in portfolio acquisitions. Strategic implications for sellers. Sub-$100,000 pricing, turnkey positioning, and urgency-focused headlines powered June's strongest engagement. Buyers are seeking conversion opportunities or operations they believe they can improve. Pricing 10% to 15% above the target may be strategic. Pricing 40% above market can create much longer market times. A certified restaurant broker can provide valuation guidance and comparable sales data. June's medians were 217 days and 45 signed confidentiality agreements, supporting the benchmark of approximately 7 months and 45 agreements. For buyers, Charlotte and Nashville listings are generating 20 to 70 signed agreements each. Buyers in competitive markets should be pre-qualified and prepared to move quickly. Franchise resales accounted for 48% of June closings and carried a median price of $128,000, often far below new unit development costs. Buyers should also consider quieter markets. Colorado produced June's largest transaction despite limited top 25 inquiry activity, which may mean less bidding competition. For investors, multi-unit transaction strength indicates that investors remain active despite higher financing costs. Established cash-flowing restaurants continue to attract buyers seeking growth without new construction risk. For franchisors, the franchise resale surge reinforces the need for an organized transfer strategy. Successful resales protect unit continuity and royalty streams, while creating opportunities to place stronger operators into existing locations. Brands that streamline approvals and support qualified buyers are likely to outperform those that treat transfers only as administrative events. Conclusion: June 2026 confirms that the restaurant resale market is being shaped by boom belt population growth, accelerating franchise resale activity, and demand for affordable, turnkey restaurants. Although transactions take months to close, buyer behavior offers a useful view of future activity. For owners, buyers, investors, and franchisors, the market remains active, disciplined, and competitive for well-priced, well-marketed opportunities. To buy or sell a restaurant, visit WeSellRestaurants.com for more information and access to the nation's largest online inventory of restaurants for sale.